Good evening, everyone, and thank you very much for joining us here for the Tax Sutra CNBC TV 18 GST camp. We're coming to you from Bengaluru, and this is going to be a series that we take across the country as the country prepares itself for the last lap, as the countdown to the GST starts for the 1st of July. I've got with me here a very eminent set of panelists, people who have been getting their hands dirty quite literally to ensure that we do have a smooth rollover on the 1st of July. We had a meeting of the GST Council as the Finance Minister of Jammu and Kashmir said that there has been a Srinagar consensus. That's where the GST Council last met. So we now finally have clarity on the GST rates, both on the services side as well as the product side. There are 6 items or 6 categories where rates are yet to be decided, and those will be taken up on the 3rd of June. That is when the GST Council meets again, and perhaps there will be one more meeting. That's what the Revenue Secretary told me ahead of the rollout on the 1st of July. So how prepared are we to make the transition, and what needs to be done to ensure that it is indeed a smooth one? On the GST big picture today, those are going to be the questions that we hope to address. Mr. Shah, let me start by asking you, and I'll start by talking about the rates. Pretty much along expected lines. I think you have done a great job of managing expectations. The principle of equivalence has prevailed when it comes to the rates, but there are still some pending matters that will hopefully be addressed on the 3rd of June. But broadly, on the rates front, do you believe that this is the best that could have been done?
Well, this has been arrived at after detailed discussions with the state administrations. And the GST Council obviously felt that this is a rate which is required to ensure that the revenue which has otherwise been collected till now will continue to be collected also in the GST regime. So yes, I think a splendid job has been done in aligning the rates to the current tax regime.
One of the fears, Mr. Shah, is, for instance, at the start of the conversations around rates, the government said that, look, in the 28% bracket, we're going to have very few items. What we do have today is almost 240 items under the 28% bracket, and even when it comes to the cess, the government had made it very clear that the cess would be levied on very select products. But now, for instance, even small cars have come under the cess bracket, which begs the question that if there is any revenue shortfall and the compensation kitty which is being assumed at 50,000 crore rupees, if there's any shortfall, are we likely to see the government adopt an even more flexible attitude when it comes to bringing items under cess, sir?
Regarding the number of items in the 28% bracket, the fact of the matter remains that the majority of the items are in the 18% bracket. So yes, you have some items falling in the 28% bracket, but this again is a reflection of the rates as they stand today. So please don't read more than what is required to be read there. As regards cess, remember the Cess Compensation Act as it stands today also has a miscellaneous clause of all other items also, where the government has the right to impose a cess of up to 15%. So that flexibility is available there.
We're hoping that the government won't be forced to exercise the flexibility.
We hope so. We hope so. Remember, these are numbers which we do not know as of now. We are now looking to compensate states for their losses, which losses we do not know as on today. So the government did need to have that sort of flexibility at their hand to ensure that a cess equivalent to the compensation required can be levied.
One of the other concerns, and I know that many people in this room would maybe raise that as an issue, is this business of the anti-profiteering clause. It is part of the law. The Revenue Secretary says in an interview to us here on CNBC TV 18 just a few days ago that there are reports coming in that companies have already hiked prices in anticipation of the GST. His word of advice to industry was hold back on raising prices altogether at this point in time till the GST itself rolls out. Now, while we understand that the government may want to adopt a light touch approach, but the government has also made it very, very clear that we will come after you if there is any indication that the benefits are not being passed on to consumers. How much of a challenge is that going to create? I mean, is the government now going to start looking at balance sheets, going to look at cost structure and so on and so forth, and that is going to be a genuine cause for concern for a lot of people here in this audience?
Well, you will appreciate that inflation is a matter of concern for the government. The GST was conceived to ensure that with the flow of credit, prices ought not to be increased. Definitely, we all understand and concede the fact that GST is a new tax regime. But again, having said that, credits which are otherwise being blocked are no longer going to be blocked. So there ought to be a positive impact on prices itself. The Revenue Secretary, like you mentioned, has gone on record to say that they have information to say that prices are being increased even right now. And that's a matter of concern, obviously, for the government. I suppose it is in that background that he said what he said. And anti-profiting clause is there in the GST law, and which gives the option to the government to bring forth a mechanism to ensure that the benefits are passed on. I understand also in the course of your interview, he mentioned that rules are going to be framed.
Yes.
If that be so, then obviously the government is very, very serious about this particular provision and would like to ensure that the benefits of GST indeed go on to the consumer.
Before I come to Mr. Vinod Kumar, let me ask you, sir, we're all anticipating that there will be challenges, which of course, when you move to and transition to a system of this scope and this magnitude, the pivot will always take time and will come with its challenges. But what would you be most concerned about? What would you be most worried about? There are concerns around, for instance, disruption of working capital, the need for liquidity, at least in the first few months. There are concerns on the IT preparedness. What would you be most concerned about today?
Awareness of the GST law itself and the IT preparedness to back that awareness. At the end of the day, however, the GST law is nothing but a reflection of the existing VAT, central excise and service tax laws. So between the VAT assessees and the central excise and service tax assessees, everybody in the country is aware of tax administration and tax administrators. That being the case, I suppose the emphasis on filing of all returns across the country online and the GSTN to handle this entire front-end processes, I would think that this will be the biggest challenge of the IT preparedness to handle the humongous flow of data which will now come in to this new setup.
Have the trials been adequate, you think, to ensure that we do, that we are ready when the switch quite literally goes on the 1st of July?
I would not like to answer for GST, but I do know that they are doing a lot of work, and like we were discussing earlier, some of the biggest names in the country are involved in this preparedness of the GST. So I think their homework would definitely be done, and I'm optimistic that the challenges will be met.
Pramod, the question that I really want to ask you is, when will the Flipkart-Snapdeal merger go through? I suspect I'm not going to get any answers from you on that one. But let me then ask you, how ready is Flipkart? How ready are your vendors? How ready are your sellers at this point in time, if you can give us some sense of the state of preparedness?
Sure. So I would say Flipkart, we started preparing for GST way back in August of last year, so about 8 or 9 months back. And the aim was that if we keep on waiting until the absolute 100% clarity is there, we won't reach there in time. So let's start with whatever clarity we have. And I would say last year, August, when the draft GST law was out, 70–80% clarity on how GST accounting will be done, how input tax credit will be done. A lot of those things are already there in the public domain. What was not known, probably the rates and the date when it will be rolled out. And we thought, let's not be dependent on those. Let's get our tax systems ready. Let's get all our accounting systems ready. And we actually started working, assuming GST will come out on 1st of April.
Okay.
And we would have been in time, if things would have been rolled out on 1st April. Now, it was extended to 1st of July, so we also extended it to 1st of July. Now, Apart from company being ready, we thought, we have several 100,000 sellers who sell through our platform. And the real challenge lies there in getting them GST compliant. And we could not have left them on their own. Right? They are a very critical part of our ecosystem. So we started, creating some kind of awareness among our sellers that this is GST is coming in. Stop talking about 1st April, 1st July, 1st September. It's inevitable, it's going to come. Are you ready? How it changes your relationship with us, how it changes your relationship with the consumers. And then now, in recent past, signing up for their online tax trainings, online tax registrations, and getting them, hooked up to practicing chartered accountants or practicing tax professionals who will handhold them in smaller cities, tier 4, tier 5 kind of towns, and take them through GST.
Okay, so at this point in time, what comfort do you have in terms of the readiness of your ecosystem?
I would say it's getting there, but typical Indian mindset of the SME players, they will
till the last hour, is it?
Probably, but we do not see this as a concern that they will not be ready if GST is rolled out on 1st of July. So maybe last fortnight of June, they will start picking it up, and then there will be a mad rush. Maybe the systems will be clogged, the websites will be clogged. But yes, we do not see it as a real concern that the sellers will not be ready.
Okay. So if, for the benefit of the viewers who are watching and for the benefit of people here in this audience as well, if you can give us an, anecdotally, for instance, if you're an insurance company or a financial services company or a telecom company, because of the multiplicity of registrations, what happens really to compliance?
The compliance remains the same. It is just that instead of having to file a single document across the country, you now have to file documents state-wise. Remember, this issue has been debated
ad nauseum.
Ad nauseum. And also within the GST Council, because the central government, and especially the Central Board of Excise and Customs, had come with this experience of having a registration pan-India. And we had seen the merits of it. We also had created institutions like the large taxpayer unit, where again, an assessee could have a single registration for his entire country's operations. So these are experiences which we felt could have been brought into the GST itself. The state's experiences obviously were different. And their concern primarily was about the flow of credit itself. Because remember, there is bound to be an accumulation of credit at some place, and we're now talking of revenues which will impact multiple states. So there are serious concerns from their side, which is why centralized registration remains an option available in the GST law as it stands today, which has, however, not been operationalized. So an insurance company or a telecom company or a IT company, which till now is having a single registration and hence managing all their operations from a single place, can continue to do so perhaps. But like my other panelist has just now mentioned, it would have to be individual state-wise, because concerns of each one of the states have to be addressed with regard to the flow of credit and the possible revenue loss of gain for that particular state.